Secrets, the channel for learning about trading and investing. Welcome to Quick Market Analysis for February 14, Wednesday 2024. So we had a very high volatile day that was finally closing in green, and are we heading to a consolidation instead of what was expected as on yesterday. Let's try to see the technical charts, understand them, analyze them, and then come to a conclusion. Here we have the wrap-up of the day. You may take a screenshot of this, but the Fyers data is not updated yet. This is as of yesterday's data. But before that, let's deep dive into the charts. We'll see the Nifty and the Banknifty charts now. Okay. So here is the candlestick. Look at today's move. The last candle shows it's a green hammer, and it has reclaimed back the last 20 exponential moving average, and it's an inside bar, completely inside, engulfed inside the previous candle's body. So which an inside bar candle indicates consolidation. A hammer, it does not have much effect on levels here because it's not a downtrend, neither an uptrend, somewhere in the mid. So but otherwise it can be a reversal from where it is, depending on if the price is moving above the high or the low. Look at the Banknifty charts. The candlestick last what we have is again an inside bar, completely engulfed in the previous candle, except for the wick. The body is completely inside. And again, it's indicative of the consolidation, and it's a wide range bullish candle movement. One more thing that is missed out is this is a bear trap. It trapped the bears by moving down in the morning and then from there closing much above the previous candle's close. So it's a bear trap. Right? So we have bull traps one day, bear traps another day. Look at this. We have a huge fall one day, next day huge up. Then we have huge fall. Then we have huge up. So it's crazy volatility that is happening in Banknifty for the last 4 days. No doubt about that. Let's put in the trend line channel also to the picture, and here we know that Nifty had made a reasonable 4.5% of rally, completely recovered that retracement, and then but it could not move further up to the channel top. It met with the resistance as it had multiple times earlier, and then started retracing and did 2.5%. That means gave up half of what it had recovered from the previous retracement. But today it says that there was just profit booking, and I'm not interested to go down. Probably I may think about giving one more attempt to the swing high or the all-time highs. Right? That's what probably may be indicating as per the candlestick's pattern. While Banknifty did all big gains of 620 points, and that's around 1.4%, but still it could not climb above the previous and close above the previous candle's high, nor it could clear the 20 exponential moving average, which is very crucial. But it's reasonable to assume that the 200 exponential moving average may be acting as a good support, at least the zones nearby back the previous swing high. It's a confluence of the previous swing high, 200 exponential moving average, and 61 Fibonacci retracement from the top. 61 Fibonacci retracement is very crucial. Any breach of that will be big moves on either side normally. So that's Banknifty. And Banknifty also had earlier attempted to climb back to the blue colored trendline channel, miserably failed, then fallen back to the yellow trend line and was heading south towards the midway of that where the 200 is there, but taken across once again. Probably it may be saying that it is trying to go to attempt the 200 exponential moving average to climb back into the early trend line from where it had fallen. Right. So let's look at the resistance support level. levels. The resistance for Nifty first would be the 21,851, one of the previous swing highs. Then next previous swing high of 22,126, but before that we have the 22 peak rounding number resistance also. So as I was saying yesterday also, it's an M pattern that is confirmed only if there is a breach of this 21,150. Right? Then an equal movement of an equal movement of 1,000 points can come down. If that breach happens, it's a double top M tap. But as of now, it's not confirmed yet. Basically, it's very evident that it's in a rectangular Bose consolidation zone. And Bollinger Bands, if you put on that, you can see that it's absolutely consolidating. Contraction indicates sideways movements with bullish bias. Now that it has reclaimed the 20 moving average. So that's what Bollinger Bands is saying. If you look at Banknifty, also the Bollinger Bands are indicating that it is contracting and it is having a bearish bias, but it's contracting in the sense there is potential for sideways movement than bearish. Now, if you look at the support resistance levels, did we see the downside levels? No, of Nifty. So we talked about the upside resistance levels. The downside, the first support would come in at 21,500, which is a kind of rounding number, right? And then it goes to the 50 expression moving average at 21,350 levels, which is also the Fibonacci retracement of 23 on the top. And after that we have 21,150, and then a breach of that would take it to 21k and 2950, which is a gap support actually. So that's the supports. Banknifty, if you go, the resistance would be, the core resistance area is 58,850. That is the 20 expression moving average. That has to be cleared first. Before that, you have to clear the 5,622. That is a 100 expression moving average, which also it could not climb. It went above that, but could not sustain. So 45,622. 100 expression moving average has to be cleared first, then 45,840, 20 expression moving average has to be cleared second, then 50 expression moving average, 46,061 has to be cleared. So these are the first initial hurdles for the Banknifty. After that comes to the 47, the 46, 500, and then the 47,000 and 47,200. So only if that much of climb happens, would it be can we assume that it may be joining the value in the upside. Until then, it's just consolidation, nothing but consolidation with violent volatility for some reason. So downside, the first support obviously would be the 44,677, which is a 200 expression average, but it is also a Fibonacci 61 retracement of 41,600. It's also a swing low, very close by a swing low, which is at 44,429. So this 44,400 level to 44,670 level. So that is going to be very major support, very crucial support. If that is breached, then we may have problems. 61 Fibonacci retracement is breached, 200 exponential moving average is breached, lower low, lower high pattern is once more confirmed. Then it could take it to 943,960, which is a gap support, and then eventually to 43,600 likewise. So it's very crucial for the Banknifty to at least not breach the 200 exponential moving average in the previous swing low. 44,400, very crucial. But to keep closer watch on those level more than the other levels in the Nifty. The breaching of that on the Banknifty is what matters. Because it is already weak, and if it breaches that, it becomes really weak. So then the Nifty has no other way but to come down and join the downside party. That's very crucial. So now that we have seen, let's just go back and then look at the pattern. So we had 0.6%, 60.64% lost. Gain today. 127 points gained, but we had much more gain of 1.38%, 1.4%, 620 points up on the Bank Nifty. So we discussed about the candlestick and all that, and I'm not repeating that. We can read through all these things. Intraday it was very volatile, although it was trending up in the Bank Nifty especially. Eventually both of them closed green, but there is steep resistance for the Nifty and the Bank Nifty. Nifty has the resistance near these, near that 21,800 zones, and Bank Nifty had stiff resistance at the 46. So at the 45,700 that zones. Anyway, it managed to close about 21,700 in the Nifty, and it managed to close about the 45,500. That's a good thing, but it still could not manage to clear that exponential moving average. So basically it's consolidating. You already seen that, I'm just repeating. Suppliers are buying since last 2 days, very small quantity, not much. But earlier they were selling 40,000 crores in cash market for consecutive 2-3 weeks, and while DLs are buying, so DLs continue to buy the same way. But yesterday it was very surprising that it was not the institution that was selling, it was the retailers who panicked and profit booked. So it looks like that. Today it was a green day, so there must not be much of institutional selling, but check the data if the data has come in or not once again. Last time it had not, right? So we'll wait for that. Resistance support levels, I'm not repeating that. The momentum that we indicate that we're using is the RSI. RSI indicates that it's sideways and it's rising up the Nifty. And the good part of today is that the Bank Nifty has once again climbed back into the sideways momentum on the RSI. Into the sideways momentum, not normal bearish. It was a big fall yesterday. It had breached and fallen the momentum on the daily charts in the bearish zone. So it has recovered from that, but the trend has not recovered on both indices on the short term. So it's still bearish. So we are from there. Trend is still not bullish in the short term. So VIX is kind of flat, close 2% down, small cool off, but very close to 15.8. Not that great. It's outside the low volatility regime, and you have to be extremely cautious as if it is for the high, heading up towards the 1820 levels. You know, cut 20% size, as I always say. Bonds, bands, we already studied what it is indicating is sideways, absolutely. So technically the charts indicate a loss of momentum in the trend. Some reclaiming of that after having a deeper fall in both of that yesterday. So this gained that 20 expansion. The good thing of Nifty is Nifty climbed back to 20 expansion average, while Bank Nifty reclaimed the momentum, the bearish momentum in the sideways, and climbed back and sideways. So there is a retest actually that happened on the Bank Nifty yesterday. But it seems like that 61 Fibonacci levels seems to be a good support zone, right? But ultimately, if you look at the charts, it's a lower high pattern in the Bank Nifty, so it's bearish in nature. It's more bearish actually as compared to the Nifty, and both of them have resistance upside. You already seen that. Now, the next study will be on the major sectoral indices. You can see that it's a green. It's a green across all the sectoral indices except for the metal and the IT. Right? And auto and the pharma. Oh, it's a green today except the metal. It's only the metal. Sorry, there's a full stop missing there. So it's a green day except for the metal. So metal is always set that closes negative. IT, auto, the former. So three sectors are maintaining the bullish momentum, and metal in reality they maintain the sideways momentum. And FMCG one that has fallen to the bearish zone. So one sector is bearish, others are managing on the sideways. And we have some of the sectors which are bullish. IT and pharma, the defensive stocks, and the auto also is maintaining the bullish momentum also. So always a mixed bag, but yeah, there are few sectors which just driving the market up. Now if you study the major heavyweight stocks that are delivered maximum to the dice, you can see that it's a red except the LTC, which, oh, I'm sorry, this is a mistake. It's a mistake. It's all closed green, and it's only the ITC that has gone slightly red, flattish. That too. Momentum wise, if you see, it's HDFC and the ITC that has actually gone to the bear zones. Lines on the teachers is maintaining bullish momentum with the sort of sideways. So it's again a mixed back in the heavyweights that contribute maximum also here. More gains for seen in the Reliance and the Kodak Bank. Recent prices is showing green, and it's at the very top. And it has been rallying just like our market has been rallying. Also, no major cues there. Dollar is flat, rupee is weak as before. Crude is trying to move up. It's at 77 now, heading towards the channel top where it is. So it's attempting to move because of the global cues. Got to watch for on that, being an oil import company. Oil is spiking up. It has made recent all-time highs and it's not ready to move down. It's consolidating at the top. Crude is consolidating at the top or the bottom. That's how it is. So every dip is a buying opportunity to invest in quality stocks for long term. This I think is what I would say. So yep, that's the summary. So all these yep. So that's about that. And yeah, I'm buying Nifty expiry. So levels for the next expiry is 45,000 to 47,000. That's my range for tomorrow. Piece here is 0.96, which is again bullish, which is why it's also long build up. So long moves within the time range is what option riders are saying the level size. So I'm not going to basically sideways apply to strategies like that, but although it's not favorable if we consider the difference between the spread of realized and implied volatility and realized volatility spread difference, if you see, it's not in favor of sellers, but otherwise momentum wise, if you see it sideways, so then maybe the only one that may work until the real breakout is confirmed when the momentum is in the bulls wants in both the dice and both time frames. We have to wait till then. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Play it safe. Bye.